Good evening. This is Straight Talk with Eugene Chan. Our guest tonight is Tan Sri Andrew Chang, a renowned economist and financial analyst with over 4 decades of experience in the field. Mr. Chang was recently appointed as one of the Chief Executive's Council of Advisors and is the Chief Advisor to the China Banking Regulatory Commission and also serves as an advisor to the UN on Sustainable Financial Systems. Previously, he was chairman of the Securities and Futures Commission of Hong Kong and a central banker at Hong Kong Monetary Authority. This evening, we will be exploring the question of whether there is a new world order emerging in the wake of recent economic and geopolitical developments. Welcome, Andrew.
Thank you very much indeed.
Thank you
honor to be here.
Yeah, thank you for coming to the show. And let's begin with the topic of the show, that is there a new world order, especially emerging in the world today in the area of financing the economy, and actually what has brought it on?
Well, the New World Order is already here. It's moved from a unipolar order to a multipolar order. That means there are many more players in the game. This has made many major changes. As we all know, geopolitical tensions has risen, technology has changed, climate change is a huge issue. The North, which is rich, is aging. The young young are mostly in the South, and they're growing. So they want to have a voice in the new order. Mm-hmm. And there's a tension because the current order, which is run fundamentally by the West, led by the United States, is feeling slightly insecure. And as long as those who run the order are insecure, the system is insecure.
Right. So what has brought all this on suddenly? I mean, things were kind of feeling very fine like a few years back, but suddenly everything turned into such what we call a turmoil in recent years.
Well,
why did it happen?
The situation after Second World War was the emergence of America as the greatest of powers, militarily, economically, technologically, and completely defended by 2 oceans, the Atlantic and the Pacific. And before that was the British Empire for nearly 200 years. And before that was the rise of the West when the Europe started, discovering Americas and finding the new route to Asia. But before 1500, the world was basically mostly Asia. 50% of the world's population was in China and India. And at around the turn of the millennium, which is 1 AD, there were 2 greatest empires, the Roman Empire and the Chinese Empire. And these hardly met, but was connected through the Silk Road. So if you look back in history, the West has risen very fast, since 1500, but the acceleration was after 1750, right. When the British conquered India and America got independence, 1776. Mm-hmm. And then after that, the Industrial Revolution. But today, with the spread of technology, China, India, Russia, Brazil, Indonesia, all are rising.
Mm-hmm. So with all these changes that you have just mentioned, I mean, looking for a macro view, with you saying that the West, primarily leading by the United States, feeling a bit insecure, and that's the reason why we had all this recent turmoil. So how is all this change affecting the global financial system, and especially our economy that affects all of us?
Well, the world is an American, Pax Americana, mm-hmm. Of which one of the pillars is the American dollar. And, the dollar accounts for roughly 60% of the world's foreign exchange reserves, 60% of the transactions, in, trade finance, for example, is in dollar. Foreign exchange markets, 40+%. So the dollar is very, very important. Mm-hmm. But as the other currencies begin to emerge, there are some questions being asked. I don't see the major change in the dollar for quite a few decades yet. Mm-hmm. But, as you all know, there's a split in the supply chain, what's so-called decoupling of the supply chains, mm-hmm. along technological and geopolitical lines. People are friendshoring. The restrictions on technology exports. All these make life very complicated for businesses. And in finance area, we now face cyber-currencies.
Right. So with all that mentioned, I mean, you kind of look at the West as kind of sharing the leadership side with the East now, with the mainland in power. So how is all this affecting countries like Hong Kong and other Asia-Pacific cities, Asia-Pacific region cities? How is that affecting us?
Well, Hong Kong is an international financial center, no doubt about it. So Hong Kong is right at the heart of Asia. I mean, East Asia particularly. It is in the very fast-growing zone. There's a lot of trade. It's a very important window of China to the world and the world to China. So there's no doubt Hong Kong is, in the middle of this. How we navigate all this is very, very critical. And I think we all need, very, clear heads, patience, and deep understanding of all these very complex trends today.
Right, you just mentioned that there's a shift of power again from the west to the east, and Hong Kong and other Asia-Pacific cities are in this region. So Hong Kong, I'm sure, as an international financial center, has benefited a lot in the past. But how's all these geopolitical factors going to affect Hong Kong now? Will Hong Kong still be having the extra advantage or being affected by it?
Oh, absolutely. I think one should never doubt the historical and strategic importance of Hong Kong. Take, for example, the recent Silicon Valley Bank, I wouldn't say collapse because it's taken over by the FDIC, and then I could say the rescue of Credit Suisse by merger with UBS. This has shaken the confidence of people in the West's management of finance. If you're going to lose, money investing in the AT1 Tier 1 bonds of Credit Suisse, you will start, questioning, are my deposits safe? Or my investment in this area safe? And if I'm, in what appears to be a sensitive area, or I never was thought that I was in a sensitive area, but I could be dealing with a sensitive person and that person's sanctioned, or I'm sanctioned. Yes. Life gets extremely uncomfortable. You have no certainty these days, right? And so I think finance rests on trust. Trust in the institution, trust in the currency, and if these are shaken, I think life becomes much more complicated.
Yes, since you mentioned about that, so how can Hong Kong minimize all these negative effects? What can we do?
Well, Hong Kong has got a very, very, very strong record. It's got a link to the US dollar. All the top, banks in the world, asset managers are here. It's gone through, storms before and, came through, very, very well.
Right.
Steady as she goes. That's the whole thing about finance. So I'm very confident that, Hong Kong can, come through this very, with flying colors.
Right. One word that constantly comes up in Straight Talk is with the sort of Singapore's new position. So do you think Singapore is competitive enough? Is going to set a new order in this part of the world?
Well, Singapore, punches above its weight. It's only a city of about 5.5 million people, and it's in the same time zone as Hong Kong. So Asia is big enough to have several financial centers. Up north there is Tokyo, then there's Shanghai and Beijing. Shenzhen is emerging, right? So having Singapore, and you can't rule out Jakarta as a very important financial center in the years to come. It's all good. That's the it's a multipolar world.
Right.
That means you've got multipolar hubs.
Right. Yes. Andrew, one area that before we go to the break is I want to ask you about digitalization. I mean, that's affected everyone's life, and people say that COVID-19 has actually the change to have sort of kind of accelerated. So what is your view on that? I mean, how is that going to changing the way we're doing money and other financial transactions?
Well, money is a virtual other side of real goods, right? It's a representation. And I think the rise of digital currency has demonstrated that you can virtually create currency with no change in the underlying, which is the physical assets. And that itself is danger because that can create inflation. Okay. But digitization can't be stopped. It's changing in ways that we have not even dreamt about. I mean, this last few months, emergence of ChatGPT, artificial intelligence, is revolutionary. This is not even evolutionary. This is revolutionary, right? In the next 5-10 years, you'll be talking to an asset manager, your financial analyst, virtually in a hologram, and is not a real person, but he's got all the data and the analysis, in behind him in the cloud. Right. So, digitization is changing finance dramatically.
Right, Andrew, we have to go to a break now, and viewers, do stay with us. We'll be right back. Welcome back. We have been talking with Mr. Andrew Shang about the economy in Hong Kong, how it might be influenced by the geopolitics, and also the impact of digitalization, both its opportunities and challenges. Let's go on to talk more about the need for the regulations and how all this means for Hong Kong. So, Andrew, just before the break, we just touched on digitalization, and we said it's affecting everyone's lives, and you mentioned ChatGPT, which is something more than revolutionary. So can we just spend a bit more time on that issue? Because a lot of people are starting to say, hey, this is getting dangerous. Will we be one day be taken over by all this technology or AI? What do you think?
Well, some things change, some things don't. But the speed of things change is now much, much faster. What we saw in Silicon Valley Bank is a bank run, which has been going on since the banks evolved, which is people taking money out of the bank, at Twitter speed. That means, you have rumors over a bank, and over the next few days, you see amounts of money being taken out electronically so fast that the bank has all its assets being sold at losses, which caused the collapse of the bank. And therefore, the regulators need to understand this. It's not just the regulators, it's the central bank, because who provides the liquidity for this. But ultimately, it's about how do you regulate now, therefore, banks. And the basic, what has happened with Credit Suisse and Silicon Valley Bank is that the regulatory model of bail-in, which was implemented since 2008, as you recall, in 2017, the Mark Carney, former governor of the Bank of England, said, well, we've solved all the fault lines of the financial crisis that started in 2008. Nothing has been solved. If anything, because they said, well, banks would not be too big to fail. And if they fail, you would allow the orderly exit of these banks, and you bail in all the shareholders take the loss. But guess what happened? The central banks have all, in the United States and Switzerland, have essentially guaranteed all the deposits, including the uninsured deposits, just to stop the bank run. So I think we're now emerging into a phase in which regulation will have to rethink the old model, and secondly, rethink how digitization is going to change the game. Right. There's a lot of study on this, but the people tend to forget that the cutting edge of digital central banking, central bank digital currency, a lot of experimentation, pilot is being done here in Hong Kong.
Right. So, Andrew, since you mentioned about all these regulations, I mean, that means with all the use of digital finance, there'll be more regulatory frameworks to address issues such as cybersecurity and data privacy that we listen to all the time, or even like the TikTok meta, always talk about all this. So all these institutions are going to have bound by all these complex rules. So aren't the investors or the consumers the ones bearing the cost?
Well, I think when this is the model of caveat emptor, right? Buyer beware. But the buyers are now are saying to the regulators and the central banks and all this, well, things are getting very, very complex. And if you pass the risk to me, and if I'm unsure, I'll run. And so how we make that balance between government state intervention to safeguard the system, and yet the risks are not going to be created through what is classically called moral hazard, is very, very critical. There is no hard and fast rule in this. Everything is a matter of judgment. And I think because there are big waves out there geopolitically, we're moving into a little bit of uncharted territory. Because technology is just moving very, very fast, as I said, right? And finance is at the heart of the geopolitical tension. So it's extremely important that we have total cooperation. That means all the global central bankers, the financial community, the business sector should be talking to each other, see how we can work together to create much more stability in the system.
Right, with all the regulators having to impose new rules, I'm sure they tend to be very, very cautious, and they want to be secure in their own interests. So how can they make it more user-friendly? Because eventually, I think the cost is going to pass to us as consumers.
Well, you can see what's happening with technology, right? Technology makes certain things simple and easy and user-friendly, and at the same time, it makes everything even more complicated. Right. That's the bandwidth problem that we're dealing with. There is no more, simple, easy. Everything's much, much more complicated. You can't take anything for granted. Many things are possible because of technology. So therefore, the consumer needs to be understand that ultimately, if anything there are losses, it's their money.
Right.
At the same time, for the finance industry, you're managing other people's money, and therefore you have a fiduciary responsibility to manage it well. So, don't buy things that you don't understand for the consumer.
Right.
And for the finance industry, don't sell anything you don't understand either.
Right. Yes.
So I think the responsibility is all round.
Right. So, Andrew, in the early part of the show, you said Hong Kong is definitely an international financial center, and we are going to develop as an international innovation and technological hub as well. So you have just told us about the impact of digitalization on the financial system and our economy. So what does this all mean for the future of finance and the real economy in Hong Kong? Because things are changing, and what opportunities and challenges do you foresee ahead for Hong Kong?
Well, Hong Kong is strategically positioned, right? It's literally in the middle of the North Asia, East Asia particularly, and also in ASEAN, which is nearly 700 million population, going to be the fourth largest economy by in the next 10 years. And then on the west side you've got Europe, and the east side across the Pacific you've got American markets. So Hong Kong is very well positioned, and it's a matter of building on these comparative advantages, understanding the technology, and have a clear-eyed how Hong Kong can play a supportive role to the changes in the real economy.
Right. Andrew, the Hong Kong government has spearheaded our I&T development by injecting more than $150 billion since 2017 and introduced comprehensive I&T policies. When Dr. Kennedy Wong was here a couple of weeks ago, he said that after 2 sessions, we also heard that Hong Kong businesses should leverage on the tremendous opportunities arising from the national development. So what about, with all the challenges you've mentioned, you now being a member of the Council of Advisors to the Chief Executive, they mentioned you guys met last week. So how would you advise the government and policymakers, especially about such major global changes that we all mentioned for the whole show?
Well, it's very clear to me that going forward, competition is about a knowledge-based economy, whoever has the technology, whoever has the know-how, whoever has the management of the technology itself, right? The human capital, the social capital, the organizational capital are going to be winners. So ultimately, it's all about a talent war. And I think, for Hong Kong to be open to the world's talent is very, very critical.
Right.
The environment is very, very important. People love to work in this kind of, free, open discussion of ideas in order to have innovation to go forward.
Right.
It's very, very critical.
So you just also mentioned the word talent. I mean, we know that Hong Kong is having a talent shortage at the moment, and the government is actually encouraging talent migration into Hong Kong. But on the other hand, some of our local workers may be displaced by all this new technology. How can the government help them to acquire new skills and to find new jobs as a real economy? Just now you talk about, we used to have bank tellers to look after the customer coming for the bank run, but now you can just do it over your handphone, for example. So what would you advise the government in this part?
Well, I've come to realize that going forward, it's all about technology, tourism, and talent, right? I mean, the technology can't replace a brilliant cook. The technology can't replace a very good person who can give very good service, in health, in dentistry, in education, right? All these, are personal services. And people are going for high value services, right? Good quality services, trusted services. And that is all about people. So it's talent.
Talent, all right. Andrew, we're running out of time, but very briefly, what steps can the government take to ensure that the benefits of all these shifts are shared widely across the Hong Kong society, not just to one particular sector?
I think, being, more inclusive is very, very important. That means, life is not just about being rich. Life is being about well-being and happiness. And the happiness of the many, for the many, is what will take us forward.
Right. Thank you, Andrew, for giving us a bird's eye view of the changing dynamics of the global economy and the impact on Hong Kong's financial sector. It is important that we can all ride this wave of opportunity and are also well equipped to meet the challenges arising for these challenges. Have a good week and good night.